Hello kind people of YouTube, and welcome back to another crypto market news update discussion video. If you're subscribed to my channel, you know I do these every single day, and if you're not, what is wrong with you? Subscribe. Anyways, today you see I have a bunch of articles open here. It has been a big day in the markets, not that big a day as far as news are concerned, so let's take a look. Let's start by refreshing CoinMarketCap briefly here. Now today we see the most movement we have seen in a while in the markets. Everything, with the notable exception of Bitcoin, pretty much everything shot up like crazy, led by XRP, double-digit gains, up 12.5% right now. It actually briefly took the number 2 spot from Ethereum again earlier today, which if you remember yesterday I said that it might. About a month and a half ago I made a video where I predicted that they would repeatedly battle the position away from each other for a while, before XRP then permanently rips number 2 from Ethereum. I was off on my timeline. I expected that to happen a bit faster, but I still stand behind that prediction, just not exactly during which time frame it will happen. I think they will continue fighting for a couple times until XRP overtakes Ethereum to become the number 2 by market cap. And we briefly saw that a while ago, a couple hours. Right now XRP has fallen a tiny bit, which is to be expected after significant gains. It went from, I believe, 47 cents to 53, but we'll read an article that has all the details in a moment. But that definitely the big winner of today, and seems to have dragged a lot of other coins with it. If you look at the 7-day graphs here, you see that XRP shot up before most of the others. Most of the others have shot up a couple hours later. As a whole, the market cap has reached almost 217 billion. If you remember, just yesterday it was, I believe, 211 billion, so 2.5% up the entirety of the market. The 24-hour volume is also significantly higher than we've seen in the last couple days. At 15 billion, it has been around 10 to 12 billion for a while, and Bitcoin dominance fallen as a result of altcoins significantly outperforming Bitcoin today, to 51.6%, which is also the lowest we have seen in weeks. For the last couple days it has been in the high 52, 53, sometimes 54% area, and now we see it at 51.6%. Of course, when we see the markets as a whole recovering, we usually see Bitcoin recovering more slowly, to a less significant degree than altcoins, which is offset by when the markets are going down, altcoins usually performing worse. Bitcoin is very much a coin that is seen as something that you can stably put your money in when the market isn't doing well, while when the market is doing well, people push their money into altcoins, so we always see that kind of movement. It is unusual though to see pretty much no movement at all in Bitcoin when the prices are going up for the entire rest of the market. Minus 0.09%, that is essentially no movement. Aside from that, we see here everything pretty much going up. I always take a look at basic attention token the last couple days because it was just added to Coinbase. That, after a couple days of significant growth, has not moved today and is still on number 30 here. But let's take a look at some analysis, and well, it's not so much analysis as a look into what exactly happened with Ripple here. All these articles are of course linked in the description. I always begin with articles that look at the markets before I go into news items. Ripple XRP briefly flippens Ethereum to become second largest cryptocurrency. Ripple, long the world's third largest cryptocurrency, capped off an impressive single-day rally with a foray onto the market's silver podium, briefly evicting Ethereum from the market cap ranking it has long called home. The rally, as CCN reported, saw the Ripple price rise an astounding 14% on a day when Bitcoin traded sideways and no other large-cap cryptocurrency rose more than 4%. In fact, XRP's single-day return was triple that of Metaverse ETP, whose 4% gain was second best among top 50 cryptocurrencies. This article was posted a couple hours ago. By now, some of them have exceeded 4%, I believe. Yeah, we see Bitcoin Cash up 6%, Stellar up 4.9%. Following the upswing, the circulating value of XRP briefly surpassed the circulating value of Ethereum. According to CoinMarketCap, Ripple assumed the silver crown shortly after 9:42 UTC and briefly claimed as much as 10.35% of the total cryptocurrency market cap. Keep in mind though, people use Ripple and XRP and Ethereum and Ether interchangeably sometimes, as this article does, as I accidentally do all the time. XRP is the currency, Ripple is the company, Ethereum is the underlying technology and network, Ether is the currency. While crypto startup Ripple, still the majority owner of the token, has made progress in promoting the adoption of its blockchain products, including XRP, which, unlike the firm's more established services, utilizes the XRP cryptocurrency, it's not clear what predicates today's rapid Ripple upswell, XRP upswell. In any case, it's not the first time this year that Ripple has managed to punch past Ethereum to become the largest spec in Bitcoin's rearview mirror. On several occasions, XRP has seen an unexpected price surge that is uncorrelated to the rest of the market, enabling the token to attain the silver podium, albeit briefly. In September, for instance, Ripple rose a dramatic 64% within a single daily trading session, ultimately peaking above $30 billion after sitting as low as $11 billion just 2 weeks prior. However, on each of these previous occasions, the XRP rally quickly ran out of gas, and the asset proved unable to cement its position as the silver to Bitcoin's gold. The two cryptocurrency assets remain neck and neck as of the time of writing, but it appears that history will once again win out. At present, Ethereum has a $21.9 billion market cap, giving it more than $700 million of edge on Ripple's. And that has actually gotten a bit smaller again. We see here about 625 million in between them right now. But this is exactly as I predicted a couple weeks ago. They will battle it out over and over, and most of the times Ripple XRP will fall after. This makes perfect sense. After the prices go up like that, they always pull back a bit. And we also see the counter reaction, the Ethereum price, the Ether price rather, usually rising as a result. But if we look at this long-term view that they have here, we see they are getting so much closer together, and the rate of them crossing is increasing. XRP is doing significantly in how its adoption expands lately, and we might finally see it grab the number 2 position from Ether in the near future. Now, this article says there is no specific reason this is happening, but there has been significant news surrounding Ripple and XRP in the last couple days, and I believe that is just what is having an impact on the market here. We have seen, for instance, at least 2 new partners for Ripple's XRP platform, which uses the XRP token, as well as Vice Ratings, including XRP as one of the 4 tokens that they think are a buy, that they consider a good investment, as they say that every other cryptocurrency should not be bought. I made a video about that earlier today if you want to check it out. So we have seen significant good news surrounding XRP, surrounding Ripple. Some of that might be having an impact on the market right now. Continuing on. Once again, Mike Novogratz is making predictions where the Bitcoin price will go. And this time he talks about new highs for 2019. Galaxy Digital CEO Michael Novogratz delivered a fresh bullish price prediction for Bitcoin November 5th. He told UK business publication Financial News that the leading cryptocurrency could hit highs of $20,000 or more in 2019. Speaking to the publication, Novogratz, who is well known for his optimistic outlook for Bitcoin prices, forecast Bitcoin US dollar to end this year at around $8,900. Bitcoin has to take out 6,800, and after that we could end the year at 8,829, he said. The largest cryptocurrency has refrained from any market movements up or down in recent weeks, instead revealing a streak of stability, which commentators such as Fundstrat Global Advisors analyst Tom Lee have hailed as a sign markets are maturing. Next year, however, conditions should change markedly, said Novogratz, with institutional investors' fear of missing out causing a surge in prices. There's going to be a case of institutional FOMO, just like there was in retail, he continued. That rush to invest should see Bitcoin take out 10,000 by the end of Q1, from there continuing to break December 2017's all-time highs. Novogratz had previously made similar predictions last month, specifically targeting the first half of 2019 for institutional interest, and a December 2018 Bitcoin price not higher than $9,000. Lee also continued his buoyant outlook for Bitcoin in the short term, telling Cointelegraph in an interview that the coin was preparing to break out. Now, some people have been very critical of his predictions in the past, but I think here he is very much just reflecting market sentiment. Now, when you're looking at his more long-term predictions for the next 5 years, they are a bit more out there, though I'm not sure they're quite unrealistic. But this, if we expect a bull market to happen in 2019, which with all the infrastructure being developed, all the institutional interest, all the new financial products built on top of cryptocurrencies entering the market, is, I think, realistic to expect that we will see a bull run in 2019. It makes sense based on the history of the markets, as well as based on the untapped potential in the financial world, that the next bull market would be bigger than the one we have seen before, meaning most major tokens, especially Bitcoin as the market leader, would likely hit at least their all-time high value again, if not blast past that to a higher price. So for once, I think I can fully get behind his prediction here. I'm not quite sure of that 9,000 by the end of the year prediction, but he is also being careful here. He's saying if it takes out 6.8, we could end up there. This is not a this will happen statement. This is a possibility statement, and we do have some more stuff to look forward to this year. We are still waiting for word from the SEC on previously rejected Bitcoin ETFs, which if those get approved, that could have significant effect on the market. We are seeing a lot of development, a lot of new companies. It is very much possible that we will see the prices slowly but surely rise. I don't expect a bull market to happen in this year still, but I think we can see a slow but steady climb. And at that rate, we would get to about $9,000 by the end of the year. 10,000 Q1 2019 seems perfectly realistic to me. Augur is not something we talk about an awful lot, but they have managed to survive after it looked like their platform might be dying down, and have now reached the highest value of Ether ever. US elections drama may be dragging Augur out of the doldrums. The decentralized betting platform built on Ethereum enjoyed a promising launch in July, but then stagnated due to its clunky user experience and a general decline in the use of decentralized applications. As Tuesday's midterm elections in the US approach, however, money is pouring into the platform. The market for which party will control the House after 2018 US midterm elections has 3,517 Ether, or nearly $727,000 staked on it at the time of writing, according to Predictions Global, a website allowing users to view and search for Augur markets. The market has surpassed will price of Ethereum exceed $500 at the end of 2018, for months the market with the most open interest by a wide margin, with over $500,000 staked at the time of writing. The midterms market is also the most liquid on the platform according to Predictions Global, with target liquidity of 250 Ether. The rush of funds into the midterms market, which gives the Democrats a 66% chance of taking the House, compared to an 88% chance on 538's poll-based model, has pushed the total dollar amount staked on Augur to a new record, nearly $2.1 million US. It should be noted though that Augur's open interest in Ether terms has been rising consistently. It was only due to Ether's declining exchange rate that dollar-denominated open interest did not exceed its July high until the end of October. And here you can see that movement. As another chart DeFroy produced for CoinDesk shows, the increase in total open interest on the platform is due almost exclusively to the house prediction market, which began to surge on October 22nd. And here we see that very nicely. There was very little investment there before and then just shot up. Augur's languid daily user numbers, however, have not noticeably taken off. According to Dap Radar, they range from 19 to 56 users per day in October. The all-time high hit on the day of the platform's launch is 256. So, take away from this, very few people are betting on Augur, but the people who are betting a lot of money. I mean, daily active users in the 2 digits, for a traditional app that would be considered embarrassing. For a dApp, that is not that terrible. It's a very low number, but you have to keep in mind the dApp market is very, very young. And even most crypto supporters don't actively use any dApps. But you can see here, even with a relatively low number of users, there's a lot happening on there, and the interest seems to be increasing. Now, this isn't necessarily reflected in more users using the Augur platform, but more money flowing through it, and articles like this might get more users on the platform. I've been very positive on Augur in the past. I think their platform has a lot of potential, though they have some issues to overcome. For instance, the clunky user experience mentioned in this article here. I think in general they're an exciting product. I hope they will see more activity on there, because as you can see, just with a few dozen people active a day, they are dealing with $2 million on there. So this if they can get more people on their platform, they could be absolutely huge, and I hope that they will figure out a way to make that happen. Bitfury. the latest in the line of crypto companies that have raised a massive amount of money in traditional funding rounds. And in this time they raised 80 million. Bitcoin mining infrastructure provider Bitfury has raised $80 million in a closed funding round, the company revealed in a press release shared with Cointelegraph. The round, which comes weeks after rumors Bitfury was considering an IPO, was led by European venture capital fund Corelia Capital. I probably mispronounced that. Other participants included South Korean internet giant Naver Group, Asian institutions Macquarie Capital, I probably mispronounced that, and Dentsu Japan, as well as Michael Novograd's Galaxy Digital. He always turns up everywhere. This private placement will take our corporate governance to the next level, broaden our financial strategic options, and ideally position us for our next phase of growth as the market matures. Executive Vice Chairman George Kikratz, I probably also mispronounced that, I'm so sorry, commented. Despite the challenging market in 2018 taking its toll on mining manufacturers, Bitfury joins industry stalwart Bitmain in mulling an IPO, a trend which is also expanding to other business sectors within cryptocurrency. You might wonder, why am I even talking about these stories, because this isn't about any individual token or the market. But what I see when I look at all these stories coming out of big crypto companies, getting millions and millions and millions in funding, getting high valuations, getting funding from traditional finance in closed funding rounds, in traditional finance funding rounds. This is traditional investing. This is they likely sold shares of their company or part of their company away. They likely gave these companies rights to these investors rights in some way and and promised something in return. This is very different from what we see with ICOs, but seeing all this money flowing into crypto companies, that means investors with millions and millions and millions and millions and millions, companies worth billions, see a promising future for the crypto market. And we should be watching all of this, because this tells us where the markets are going. All this money being dumped into crypto, being dumped into companies that are working in the crypto space, being dumped into infrastructure, into development. This means there is so much going to happen in the markets in the future. The prices are going to go up so much with all this money flowing in, because all these investors expect a return on their investment. And that means they fully expect, and they will do anything in their power to make it happen, the markets to explode in the next couple of years. Now you have to keep in mind these funding rounds, these closed funding rounds where you get funding from a bunch of companies or individual investors. Those are usually not in it for the short term, those are in it for the long term. They don't just expect a bull market. They're not gonna pull everything out the moment the bull market happens. They see the long-term potential of crypto, of blockchain, of cryptocurrency. They are in it fully. They are putting millions and millions, if millions of dollars in there. They're putting their money where their mouth is. And that's why I keep talking about these stories. You might not see how they immediately impact us in any way, but this is so good for the health of the crypto markets and for our future. And this should all give us all hope about the future of the markets. And as we're talking about the infrastructure, let's take a look at how exchanges are doing. Blockchain Transparency Institute released the global crypto exchange rankings of November, ranking Binance at the top with a 24-hour volume of $1 billion. With more than 160,000 24-hour web users, Binance easily surpasses OKX, the second largest crypto exchange in the market, in terms of the number of active users, volume, mobile volume, web visitors, and API volume. In comparison to Binance's $1 billion of daily volume and 160,000 daily users, OKX achieved $700 million in daily volume from 30,000 users. Throughout the past 2 years since the rise in popularity of initial coin offering projects, opaque listing fees and suspiciously high volumes of small market cap tokens have led to the initiation of controversial debates. Beginning last month, as CCN reported, Binance has started to donate all of the listing fees it receives from projects to charity, partially to demonstrate the potential of crypto in transparency and efficiency, financing charitable events and initiatives. But the Blockchain Transparency Institute team and its researchers have stated that many exchanges are still targeting low market cap coins with irresistible offers to manufacture fake volume and trading activity with the intent of increasing hype around listed coins on market data platforms like CoinMarketCap. We also found many of these exchanges to be preying on low market cap coins, which are desperate for the recognition and volume of a top 10 or 25 exchange. In many of the crypto projects we spoke with, this also involves supplying the exchange with a large amount of tokens, which are then used to massively inflate volume numbers on CoinMarketCap, luring in prospective traders from other exchanges with much lower but real volume. Leveraging their volume, the Blockchain Transparency Institute stated that top exchanges have been requesting high listing fees in the range of 5 to 60 Bitcoin. That is so much money just to get your token listed. In the months to come, influenced by the efforts of leading exchanges like Binance and South Korea's Shinhan Bank-backed GoPax to legitimize the market, questionable practices in the cryptocurrency exchange market are expected to decline over time. Our initial report on exchange volumes revealed many top 100 exchanges on CoinMarketCap using wash trading to gain a marketing advantage over their competitors. We found many of these exchanges gaining 80 to 90% of their referral web traffic from CMC alone. In our recent token project interviews, we have found this allows these exchanges to ask from 5 all the way to 60 Bitcoin for listing fees. Throughout the past 24 months, Binance, OKX and Huobi solidified their positions as the 3 largest exchanges in the world. Bitfarm and Upbit, 2 of the biggest trading platforms in South Korea, have recently entered the top 10, possibly due to an increase in the demand for cryptocurrencies in the country, as portrayed by a significant increase in the volume of the Bitcoin to Korean won trading pair. Recently, the Financial Services Commission Commissioner Choi Jang-gu, I probably mispronounced that as well, stated that banks are permitted to work with cryptocurrency exchanges in providing banking services, and the approval of the FSC could lead to an increase in trading activity in the local market. Oh, it's terrible how many South Korean or in general Korean names I have to pronounce. The only East Asian language I speak is Japanese, so I'm very sorry when I can't pronounce Chinese or Korean names. But yeah, here we see the health of the markets. Binance continues to be the number 1. Most of this down to their number of active users, which is significantly different in proportion to their actual volume than it is to the ones following after. And we see South Korean ones increasing here in value, in volume. Now, the important point here for me personally is all the shady stuff that has been going on there, that is going down with more legitimate companies moving into the space. But a lot of exchanges, even major ones, do fake their volume. Sometimes the exchanges themselves are doing this, especially for lower market cap coins. Sometimes it's also the low market cap coins seeming to do it themselves on the exchanges. They're essentially moving money back and forth to increase the volume. That increased volume people notice on CoinMarketCap. That increased volume usually leads to increased prices, which means it's both good for the token. I mean, the token, people see more activity, people see higher prices, people think there's something good going on there, and they flood in there. A lot of dumb money floods into cryptocurrencies that just that are essentially being pushed, that are being faked. And it's also very good for the exchanges because people see which exchanges have most of the volume for any given token on CoinMarketCap. And especially for low market cap tokens, people will usually trade it on whichever exchange it has the highest market cap at. So this is pretty much a vicious cycle that is where both parties benefit from faking stuff, from essentially defrauding their investors. And it's a very dangerous situation that we don't really have regulation for yet. But we see these reports, and they sometimes reveal these things are going on with major exchanges, and hopefully the more these reports come out, the more people talk about them, the more they make news. That might push major exchanges to stop these shady tactics. And the last story for today, we're going to talk about TRON. They're decentralizing further by removing the power of the Genesis representative. During TRON's Independence Day on the 25th of June, there was a group of special representatives that were tasked in launching the Genesis block. This group was known as the TRON Independence Group and was a community consensus-based group consisting of 27 anonymous volunteer Genesis representatives. The duties of that group during the transition into the TRON network were as follows: providing super representatives with a fast track for migration, providing exchange services for major exchanges that support token migrations. They were entrusted with the 342 million TRON held by TRON Foundation and stored them in a distributed manner to reduce risk, organizing the 12-hour livestream, handing out a small number of TRON during the livestream so the members of the community could test the different features of the mainnet. but the plan was always to replace them with super representatives after the first SR elections that started immediately after the Independence Day and on the 26th of June. It is with this background that Markus Zhao, leader of TRON's public chain division, announced that the proposal to remove the power of the Genesis representatives will be approved. He made the announcement via Twitter, as can be seen below. So essentially it took almost 5 months between the election and the power transfer being approved here. This is the second such vote, with the first one being disapproved after failing to achieve the required 19 votes from the super representatives. The first attempt in late October only got 16. The new vote to remove the power of the Genesis representatives already has 20. It has passed the 19 required yes votes and will be approved. Sesame Seed, a super representative on the network, recently published a post on their Medium page exploring the effects of the removal of the GRs. The action to remove them cannot be reversed, for it is hard-coded into the proposal itself. The benefits of removing them are self-evident in that the network will become more decentralized and there will be additional candidate rewards to better support both SRs and candidates on the network. The move might also encourage additional competition amongst all super representatives. So to me this looks like TRON system is steaming ahead, working as it is supposed to. The initial vote did not work out, but they quickly followed it up with another one in I think less than 2 weeks after. That then successfully committed to this. This of course is a part of TRON being more and more moved into decentralization with super representatives instead of the Genesis representatives in the beginning, who were volunteers rather than elected leaders of the platform. That is essentially all we have to say here. It's just everything seems to be working fine with TRON right now, and that is always very good to see. We have had TRON in the news a lot the last couple of weeks, usually in a negative manner, but that was pretty much all down to Justin Sun's behavior and not actually to the technology or token itself. And I think we need to, as much as possible, separate those two things. I've been very critical of Justin Sun, of the way he has been hyping up some collaborations that honestly should not be considered collaborations or partnerships by any real definition. And I'm very, very critical of Justin Sun in that way, but I think the TRON project itself is perfectly valid and is doing some very exciting stuff. And moving more into decentralization with these SR elections and now finally moving the power over to them is a good step in the right direction. With that, I'm going to end today's video. As always, all the links are found in the description, as well as ways to support this channel if you feel so inclined, and my social media pages and an email address where you can ask potential questions for a future question and answer video. Thanks so much for watching. As always, if you're not subscribed already, make sure to subscribe. I put out these videos every single day. Thank you so much for watching, and I'll be back with you guys tomorrow.